Welcome to part 6 of our rent-to-own investment series, where we take a look at some of the myths and fears that hold people back from investing in real estate. The benefits of real estate are too powerful for you to miss out on, so let's take a look at 10 things that may be holding you back. Myth number 1, there are no good properties left. You may think that there is too much competition, that all the good deals have been taken, or that there are no good properties left. This isn't the truth, it just means that you're thinking from a mindset of scarcity. The reality is, there are great deals out there. People are always buying and selling real estate as their circumstances change, and there is no shortage of opportunity. When it comes to rent-to-own, the bank will never approve everyone, so there will always be a pool of potential homebuyers to work with. Fear number 2, what if prices drop? In my experience, the main fear that holds people back from investing in real estate is the fear of losing money. What if prices drop? Well, if you buy in areas with sound economic fundamentals and focus on the cash flow, you should be able to weather the storm. Strong cash flow allows you to hang on to your property through an economic downturn, and as long as you are not forced to sell at the bottom, odds are prices will bounce back. Myth number 3, it won't work where I live. People often look for reasons not to invest in real estate because they are scared. One common excuse is that a certain strategy won't work close to home. If this is truly the case and not just an excuse, then there are two solutions. First, invest somewhere else, or second, choose another strategy. Rent-to-own is a fairly versatile strategy that works in almost any urban or suburban area. Myth number 4, isn't there a ton of maintenance? With any property, maintenance is a reality. Through proper due diligence, you'll learn about any deferred maintenance before purchasing the property. Then, you'll set aside funds in your budget each month to cover ongoing maintenance. While being handy can help, it is not required since maintenance can be outsourced, whether you self-manage or use a property manager. With rent-to-own, the tenant buyers tend to take better care of the property since they intend to own the property at the end of their term. They are also responsible for all repairs and maintenance, which saves time and hassle for the investor and boosts your bottom line. Myth number 5, tenants are trouble. Many people assume they will get stuck with terrible tenants after hearing stories from their friends or family, or reading horror stories from other landlords on the internet. These would-be investors are scared off by thoughts of confrontations with tenants, having to chase rent, messy evictions, or having people abuse and vandalize their property. Realistically, at one time or another, most of us were tenants, and most of us were pretty good tenants. Of course, there are bad tenants out there, but through proper screening, you can reduce your risk of renting to a bad tenant. The careful screening of rent-to-own tenant buyers means you will work with the best people and have an easier experience as a landlord. Myth number 6, isn't real estate time-consuming? Real estate can be very time-consuming if you get stuck in analysis paralysis or if you decide to self-manage several properties. On the other hand, it can be relatively hands-off if you opt to hire a property manager or partner with a real estate expert who will handle all of the day-to-day details of your investment. With rent-to-own, the bulk of the time is spent upfront identifying the right tenant buyers to work with. Once the tenant buyer has moved into their home, the rent-to-own transaction is relatively easy to manage. Myth number 7, it's too complicated. If real estate investing seems too complicated, you just need a little more education. Yes, there are a lot of strategies out there, but you only need to learn and understand one to make money in real estate. If you feel there is too much of a learning curve, you can always partner with a real estate expert who can help you find and manage great investments. That being said, you should always understand the basics and be aware of any risks in whatever strategy you use. Myth number 8, don't I need lots of money? Not as much as you may think. I purchased my first rental property with less than $2,000 of my own money. If you have other resources such as real estate expertise, the ability to qualify for mortgage financing, or are capable of doing renovations, you may be able to create a win-win partnership with an investor who has the money but lacks one or more of those other traits. Most of the rent-to-own investments we deal with require an initial investment of between $35,000 and $60,000. Fear number 9. I can't even qualify for a mortgage. Similar to myth number 8, this may be a non-issue if you have skills or capital. If you can't qualify for a mortgage because you are self-employed or have bruised credit, there are still ways that you can invest in real estate. If you have capital, partner with someone who can qualify for the mortgage. If you have skills or expertise, partner with someone who can provide the funding. Real estate provides plenty of opportunity for those willing to be creative. Myth number 10. Isn't real estate risky? Well, any investment carries with it some degree of risk. Real estate investing does involve risks, but many of those can be mitigated. If you are worried about price declines, rising interest rates, or troubled tenants, these risks can all be mitigated through studying economic fundamentals, buying strong cash-flowing properties in areas poised for growth, and through proper tenant screening. With rent-to-own, the risk is further reduced since the investor collects a fairly substantial option deposit from the tenant buyer, accumulates monthly option credits, applies a more rigorous screening of the occupant, and has a pre-planned exit strategy. Having shed some new perspective on some of the myths and fears related to real estate investing, we can take a closer look at rent-to-own as an investment in our next session.